I think it's very indicative of the trend, that major trend we're seeing in the infrastructure world, where end users, public utilities, want these 100-year life cycle solutions for the structures. And that's what the Vermont is. It's a turnkey single point of delivery infrastructure solution that happens to have a 100-year structural service life. Our methodology, our design methodology, and our manufacturing approach and our single point of delivery model is very unique to this industry. We are doing things in the industry that are different from the conventional design and procure model around precast concrete or cast-in-place concrete, these very clunky, archaic, old delivery models. It's not unlike comparison to the modern electric car or some of the things you're seeing, some of the evolution you're seeing in the manufacturing world.
And welcome everyone to the CEO briefing. It's a great pleasure to have you here tonight. Very, very exciting. A slightly different change in format. I think you'll see exactly what I'm talking about in 1 second. Water the Blue Gold, Thursday, December 14th. Wow. We got the 21st coming up, and then it's the Christmas break, right? Briefing number 240, water is the people's asset. Of course, the usual safe harbor statement, disclaimer. All right. So with that, I'm going to take a different tack because you just saw a couple screens from last week. Disregard. What I'm now doing is I'm publishing in real time every day to my Twitter account, RigZec. And so I'm going to take some selected items from the week. If you follow RigZec, then you'll be able to see it in real time. But let's take a look at some of the news that we've been covering. And there I am in my NASDAQ shot. That was a few months ago. And, I think it's a good, well, I'm not going to use big words, but basically it's looking good in my opinion. So let's keep on trucking. All right. Now, there was an article that I published about learning from mistakes. And this is kind of a big philosophy of mine because I built a whole consultancy in the early 2000s on the concept of mistake-based marketing, making a practice of it. And in fact, I have a Substack publication, I guess you could call it, a stack, I guess they call them. And this was the article. My stack is called Break to Build. What the story was basically that on techtransform.com, my archive site, there's a whole story about this. Basically, we lost our budgets in the year 2000. We had to test market our way to success. But guess what? Because we now had websites, we could throw them up, see if it worked. And it said right here, you have to be very, very close to the marketplace, sitting on a sales room floor, pitching the product yourself, et cetera. Now, we do this currently. This is what everyone does with, we build these advertising funnels and we're constantly tweaking them and so forth. Well, it actually started happening right around the year 2000, ironically, because we ran out of money for doing formal research, which I think is in a way a good thing. There's a saying that good strategy comes from tactics that worked, right? So if you do a lot of tactics and you learn from what works, then you eventually get to a good strategy. That's one way to look at it. Okay. And this is the site. If you go to substack.com, I'm not publishing very frequently, but there's 3 articles there. If you go to Substack and look up Break to Build, you'll find my site. And I'd love to have you follow me because I'm going to start publishing more. This is more personal stuff. It's more philosophical, not directly related to my role as a water CEO. All right. Now, this in Home Alone in 1990, Kevin spent $19.83. The same items would cost $68.99. So inflation is theft, of course. And you want to make sure that you get into an asset that appreciates against the dollar, leaving you even slightly ahead. And that's tangible assets. All right. Now, there's a podcast by RJ Ahmed, which will cars ever run on water instead of fuel. That was a question he asked me out of the blue. And believe me, I really have no idea. I'm not one of those people that has a water as a fuel type. Well, I explained in the podcast that chemically it's very, very hard to get net energy out of water. But again, I'm not an expert. So that was the podcast. So there was a couple, things that followed. For example, this story about crypto and black money. Let's take a look at what I had to say here.
I love crypto, but the problem with crypto is you have these huge wells of black money. Like Bitcoin, probably a third of all Bitcoin is dark. We have no idea where it is, right? And they can just manipulate with it. It's unregulated. Well, when it's asset-based, you can't really do that. It's just like a gold standard for money, right? It's a very similar thing. So that's what I like right now. You know, Bitcoin is the exception because it's special, but most other currencies, and Ethereum I like because of smart contracts. But after that, you then have to think about backing.
Okay. So that was kind of cute. And of course, what's the backing all about? It's, sure enough, it's this hard asset token that we've been talking about that is not actively being developed as part of this current whole merger that we've been talking about. It's not part of the merger. I think it'll be a future project of ours, and I think it's very promising, but all in good time. So it's not in a current plan. And AJ says they have hydrogen in cars in California. Absolutely. But here's the thing about hydrogen. Cracking water, it takes more energy to crack H2O than you get out of it. So if you're making hydrogen, you're making it from an energy source that is more than the energy you get out of the hydrogen. So you can get it from fossil fuels, you can get it from hydro, get it from nuclear, you can get it from solar, wind, etc. But you have to have a power source to crack that water into hydrogen. That's just the reality of it. Now, there's people out there who believe they've gotten around that issue. That's beyond my pay scale. All right. So with that, let's just take a look here. How water can be backed as an asset.
California, who's got a real water problem, could offset their financial risk on Singapore water. That'd be wonderful, right? It's not possible now, but it would be a dramatic improvement. So put into the sort of developmental stage right now is something called $H2O, which is a security token that securitizes the dividend payouts. I was talking to you about the investment side. If I'm going to let RJ, who has, let's say you have a greenhouse project, right? And you use a lot of water for that greenhouse, and you need to treat your water, your dirty water, and I'm going to give you a system, fine, and you're not going to pay for it up front. Well, who's going to pay for that system? We can't pay for it. We can only pay for a little bit of it. We can't pay for it scaling up to thousands and tens of thousands of sites. So we created a financial vehicle so that people can invest in water as an asset.
This is a problem because housing prices are dropping. Why? Excessive interest rates. Now you'll say, wait a minute, interest rates are dropping. True, but I believe the shock, well, I'm going to cover that in a bit. I believe the shock caused by high interest rates for several months is well, we'll discuss it in a second. But housing prices dropped because of high interest rates. And again, water as an investable asset gives us the ability to stay with those prices, right? Because the water tracks with those prices. China, not doing great. Chinese property stocks are on a real crash. They're all the way back down to 2009, just about 2009 prices, which is not fun. Asset contraction pandemic. Okay, so again, this is going to have a domino effect, I believe, on equities, stocks, but we shall see. And then this is interesting because Bitcoin, which has been doing fantastically, I'm very happy with how Bitcoin has been doing. But this is interesting because Elizabeth Warren decided to have a regulation bill on crypto. But notice that when she did it, Bitcoin was already on its way down, and then it recovered. Why? Well, a part of it is because nobody believes Warren's going to get anything done. She is 1, 2, 3, 4, 5 Congresses. What's that? Something like 300 or 400 bills, 0 passed. I think that she just has interns come work for her to just practice on how to write a bill because nothing comes out of that. But it makes a story, right? The media covers it. The bottom line is, there's not really going to be a crypto crackdown per se. I do think that more regulation is coming because there's been a lot of abuse. But at the same time, it's very hard to regulate crypto at all. That's the bottom line, especially something inherently anonymous like Bitcoin. Here's another article from the 12th and 2 days ago. And sure enough, this was just our administration saying we're stronger economically than we have been in history. Well, inflation is ridiculous. Rent, literacy, used cars, groceries, way up. I'm blown away every time I go to the grocery store. I get 3 items and it's $100. It's ridiculous. Again, stable investment asset, water. Now, here's something interesting. A lot of layoffs happening of highly paid professionals. Here's Ernst & Young. The reason why they're doing it is, hey, 130 people, you just saved $130 million, just like that. Well, unfortunately, these people are the locomotives of higher end real estate and investment and so forth. The good news is that industry is rehiring because there's reshoring going on of industry. It's happening right now. There already is a wave of new, highly efficient factories that need a certain amount of workers, but also that need their own built-in resources, energy and water. So again, a really important thing. Now, I advertised this earlier this today. This was an article in CB Insights, Coldwell Banker, which was talking about cybersecurity. Okay, it's up 29%. But look over at advanced manufacturing. That caught my eye. Up 258%. Double of what cybersecurity is. Why is this? Well, I believe that we are in the middle of a massive trend toward highly efficient. All our manufacturing went to China because it was very, human-based. People with their making things with their fingers. And that was much cheaper in China. Well, now we have the ability to make these highly automated factories that are self-sustaining and self-contained and require, fewer personnel, but more qualified. And that's advanced manufacturing. So I think that's going to be a boom. And built into that advanced manufacturing has got to be the water and energy infrastructure to go with it, or else it just won't work. Look at it, for example, I didn't cover it this week, but data centers are booming. Why? Because of AI. Well, all of these data centers need water and energy that they control themselves. That's going to be a huge space that we're very interested in entering. Okay. Now, this just came in yesterday. Buying a home is now 52% more expensive than renting, highest on record. And that's, of course, been because of the interest rates, right? Unfortunately, nearly 5% of the total population, but a very large percentage of older adults are cost burdened. More than 30%, 1/3 of their income on housing. This is not a sustainable situation. And here is a report in PitchBook about real assets fundraising. So capital raising for real assets funds. And by the way, go to Exec on Twitter if you want to read these articles in greater depth. But here's the bottom line. There is real asset funds, which is basically real estate, is in trouble. But by the way, natural resources fundraising, which includes oil and gas and now water, surpassed to 2022. So we're looking good for non-real estate type asset fundraising. Here is our friends over at PhilanthroInvestors covered my podcast, again, which you can click on this link in Twitter and watch the podcast if you're interested. And they quoted one of my favorite quotes: "Any plan boldly carried through to completion is better than no plan at all." That's actually from a guru of mine, L. Ron Hubbard. But then I added myself, just keep on trucking. So that's my little contribution to it, right? Okay. And finally, of course, you all heard about the rate cut. And what does that mean? Well, the problem is that every time the Fed started cutting rates, unemployment rate has spiked about 3 months later, right? And here is the actual article. And historically speaking, the first cut comes 3 months before the unemployment rate begins to spike. On average, the unemployment rate rises to 7.5% in a Fed rate cut cycle. Fed thinks it's only going to go to 4.1%. We shall see. But history says a soft landing is unlikely. So that's where we're at with the state of the economy. And as you can see, it really favors a new stable asset like water. All right. I'm going to do 3 quick excerpts as I did last week. And in between each one, we're going to comment on it. How is replacing jobs with robots for cheaper labor going to help folks get jobs? This is a really, really good question. We've had this argument now since the 18th century. I remember, the word saboteur comes from French people using sabots, which are clogs, to break machinery. That's a saboteur because they were trying to break the machinery that was taking away their jobs. Later in America, the Luddites, who believed in, no machines. And curiously, however, what happens is when you start using more automation, the economy gets bigger and you get more employment. For example, we have a booming service sector in America. Also, the people involved with these factories and so forth are not going to be doing manual assembly, which, by the way, you do not want to be doing that all day, believe me. But you might be working on remote controls or security or any number of white collar or semi-skilled or rather skilled jobs that are not directly doing the rote work of assembly. So I think that's the danger of people not being unemployed by AI and robots and so forth is the problem is overstated, because each time that happens, you have a huge expansion of the economy because of the efficiency gains and more people get work. That's just how it happens. Okay, let's take a look at, I hope that I've answered that. And AJ says, yes, it also creates a new market for robotic maintenance as they can't fix themselves. True enough, true enough. Okay, continuing. Here we go. So this is the Escape the Drift podcast, which again has not come out publicly, but the podcaster was kind enough to share the raw file with us, and it's been tremendously productive to give us, because John asked some tremendously good questions. So let's take a look at the first clip.
We were very, very early talking about this. 2016, we were very, very early talking about this. 2016, I was preaching about it, and nobody was like, "What? Decentralization? What are you talking about?" As you know, we were living in Los Angeles for a long time, and LA has these long concrete rivers, right?
Yeah.
That's Greece was shot and so forth. Like, well, that's the Army Corps of Engineers thinking. Since then, they got realized, no, we don't want to just wash all the water into the ocean. We want it to permeate into the groundwater. So they're literally breaking all these things and creating greenways that absorb the water. So what I'm saying is the earlier concept of big is beautiful, centralized is best, lots of concrete, those ideas are going away, and it's more particular, right? It's more decentralized, more self-care. And that also is much, much better from a redundancy point of view, because right now central districts are very vulnerable to somebody messing around with their computers and potentially doing something. It hasn't been a major there've been attacks, they've been caught, but you're much safer. This was the whole concept of the internet in the first place. Was DARPA, the Defense Research Agency, came up with the idea of spreading out computer resources in the event of a nuclear attack. So one node goes down, everything else does not. Well, it's the same idea that if you just take all your water liabilities and spread them out and make the users responsible for their own, the problem takes care of itself, and you're much more robust in terms of, anti-hacking and so forth. So It's a good solution, makes a lot of sense. Now, we're not the only people doing it. We were very, very early talking about this. 2016, I was preaching about it, and nobody was like, "What? Decentralization? What are you talking about?" And what happened was that the markets caught up with us. And not only that, we're not the only player in what we call water as a service, but we're unique in the space because there's other companies doing this. Don't buy your machine, just take the machine and let us provide you with the product, and you pay by the gallon.
Quick comment from the peanut gallery, and we will continue on.
I find it super interesting that people have a hard time understanding some of the concepts when it comes to infrastructural decentralization, when we see so many ongoing things in the social and in the tech sphere, right? So you look at like Twitter and what happened over the COVID years with like Parler and all these things where big central tech agencies basically have monopolies over everything. And so there's been a lot of talk about going open source and doing mesh networks and doing all these things to decentralize the code in the infrastructure. It's like, it's the same thing for water. Like the concept is literally a one-to-one, and they don't get it. They're just like, oh no, but the government handles all that, and it's great for public utility.
Because it's paradigm. It's paradigm. All right, because look, tech was always somewhat decentralized. The internet decentralized the world to a large extent. So in other words, its introduction to the public was in a decentralization arc, right? Infrastructure for the past 100 years has been the government. We've been programmed. The public has been programmed to thinking this is how you do it. Riggs can tell you 5 years ago, when we started talking about water, people were like, wait a minute. Water's handled by the government. You can't charge for water. They weren't putting together that you're already paying for water and you're suffering from, the downstream net effects of poor water management because the centralization of water doesn't actually work. So it took, and Riggs has been talking about Bitcoin a lot. I actually am despite the losses I took last year in crypto, I'm very grateful to cryptocurrency because it trained a vast swath of the world public that decentralization prevents vulnerability, it prevents monopolization, so when you started talking about decentralized water, people didn't do this anymore. You're like, huh? Right?
It makes me realize, when I was very young, there was a lot of propaganda about one world, and I thought it was a good idea, right? Living
We
in,
were all young ones, Riggs.
well, no, but by the time you were young, there was a bit more skepticism of this idea of one world government.
This is true.
But back, in the 19th century when I was born, there was this
And they
dream.
wore sabots.
Exactly. They wore the clogs, and I had this like shoe dance that I would do. Anyway, long story. Not going to go there. Anyway, but the point I'm making
Thank you
is
for that mental picture. Let's move on.
what we had was a vision of one world. What we didn't realize was that's a centralized world that is subject to, as we've learned, manipulation by a chosen few. So it's always dangerous to have a centralized system. You have to have multiple points of redundancy.
Nodes,
Absolutely. So thank you. That was exciting. And here comes the next one. Bada bing, bada boom, rock and roll here.
People like you and me, our investing opportunities are limited. Like, where do we put our money?
How big is this machine?
Oh, it can be. Well, here's one of the challenges, of course, the technology challenge. And we have a division with patents on miniaturized systems coming out of the big, large scale utilities down to the corner of a brewery, right? With 150 square feet kind of thing, right? And that's all you got. So we've actually done the miniaturization, and our systems are very compact, completely self-managing. In other words, everything you've got's in that box. Done. Mm-hmm. All the controls, all the treatment systems, filters, you name it, it's all there. And it comes in on a semi, gets dropped in, boom, we're done. And so that's been solved by the chief engineer of the company was a guru for decentralization 20 years ago when it was like really nothing at all. And so he's developed the concept. So that's taken care of, number one. Number two is the whole idea of water as a service, which is blossoming. For example, there's a recent unicorn that was created, which is called Gradient, and they have some MIT technology, and they're servicing the high-end users in pharma and the chip industry, food and beverage, and energy. And those companies, for example, PepsiCo has committed to 80% recycling of all of their processed water. There's major moves happening at the high end. We operate more at the everyday business level, the small to medium, $200,000 to $2 million kind of level, which is considered small in the water industry. And how we make it work is a great deal of standardization. Just, these are all like hotcakes. They go out like hotcake, boom, 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 boom. And the other thing that makes us special is we're the only people doing this that are enabling everyday investors to become involved in this royalty generating water as a service, right? It's a lot like you ever looked at oil wells, how people can invest in oil wells and get a royalty.
Sure.
It's very similar now. We're doing it for water, and we're the only people doing it. So other players that we compete against are funded by Wall Street or by venture capitalists and so forth, and regular people can invest. And one of the things that we've learned is that people like you and me, our investing opportunities are limited. Like, where do we put our money? I mean, I've got some gold ETF shares, and they keep going sideways. I don't know what's going on. There's a limited number of options. Real estate's doing pretty good as long as it's not commercial real estate. Mm-hmm. And so people are looking for opportunities to get ahead of the game. And, you go farmland, Bill Gates has that, all these AI, that's been done. Everything's been done. Water is still early. We're dedicated. We have our tagline is water is the people's asset, meaning we're dedicated to getting investors in on this early stage thing, which is just taking off, which is water tech. And that's exciting as hell.
This is our secret sauce, is that we've developed this capability. And Ken, you are the high priest of regular people investing.
I have a funny hat that I put on and all that stuff, the robes.
And you're very benevolent.
Yes.
But then your New York accent ruins it. It's like, what?
Beneficent.
Munificent?
Beneficent.
Doing good. And then we have AJ, who's the mad scientist, who's and by the way, I didn't
actually, I'm the mad scientist. He's the safety expert. Like, he prevents me from blowing up the lab. He goes, yeah, no, don't do it. I go, I have an idea. He goes, no, you're not going to do that.
Yes, I've done those experiments.
He's the OSHA guy. He's the guy from OSHA.
But the big news that I wanted to mention, it's not in my slideshow, is that we've entered both Rumble and Twitter, and early indications are very, very positive, right, AJ?
Yeah, yeah. I mean, within a couple hours, we were already starting to get hits on Rumble after getting the leads going, and Twitter is also, well, Twitter is about to be started this evening. Once we get done with this show, I got everything all queued up. I just need to hit the go button. But yeah, things are moving along. We've got trying to expand into some new markets. I actually made a Twitter post today. If you guys don't know, and Riggs has done a really good job about being vastly more active on socials. If you guys aren't following Riggs and Ken and humbly myself on Twitter, please go ahead and do the things, because we're trying to talk about more of this stuff on a more frequent basis. If you like what you see on Thursday night, then you really enjoy following us on Twitter. But I made a post there today, basically just saying I had an interesting conversation with my brother-in-law who was looking to try and start up a business, and he's like, "Oh yeah, I'll throw out some Google ads," and I was like, "Why Google?" And he's like, "Why not Google?" And I was like, "Do you know that your audience is going to get reached with Google ads?" And he's like, "No." And I said, "Yeah, I mean, if you don't know where your audience is, you need to be taking a second look at those things." And there's very clear indications that people are much more, yeah, thank you. Let's get uncomfortable. Just because you might be comfortable with Google ads, is what I told him, is may not be the reason you need to do it. So start looking into the platforms your target audience is and where you think people are that you want to reach, and go for those. And so, yeah, Rumble's been a very promising start. And I think Twitter's also, or X, is going to be another one there too. Just continue to grow the OriginClear VIPs and kind of help us usher along this mission, because guys, it's super exciting. My point ultimately is that there's a lot of really good stuff going. And one thing you don't mention in some of these podcast rigs is that even though water on demand and modular water systems is really geared towards that small to mid, size application, we also have progressive water that is now part of the water on demand umbrella with this merger, which can do massive custom systems. So things are constantly evolving that allow us to tackle more and more and more within this space, and makes us even more of a juggernaut moving forward. And that gets me even more excited, because I get to do more fun things.
We are posting all of the handles. There we go. So continuing here, let's do the last clip, and then we can get even zanier than we have been. How about that?
And there's lots of people out there that are suffering with, they're being fined, for example, or they're being forced to truck their water to another county. They're just suffering, but they haven't gotten to solving.
How many of these systems have you guys installed to date?
Oh, conventionally, hundreds of thousands. I mean, it's a lot. We, as I say, one of our divisions has been in business for 25 years, so we have a lot installed. What's brand new is this "don't pay for it up front" thing, which is we just beginning on that. And for that, we have to get to these people long before, because our business is based on, oh, you figured out your problem, you got your consulting engineer, you figure out your finance, and you put it out for bid. And then we hear about that. Well, we need to get involved with those clients long before they've solved the finance problem. Because once you fix the finance, you're like, no, I don't want to hear about it. I'm good. I took care of it. It's fine. So we got to get people who have not figured it out. And there's lots of people out there that are suffering with, they're being fined, for example, or they're being forced to truck their water to another county, as often happens with breweries. They're just suffering, but they haven't gotten to solving. And that's the next audience we want to get to. So right now, the people we're servicing are the people who are ready and able. They got cash in the barrel. They're ready to go. And that's a big business. We tripled our business last year. We're rolling. We want to go even further into the potential business that has not yet, they haven't yet figured out, oh, what do we do? And we go, hey, we talk to consulting engineers, give them the option. And now when they first talk to somebody like that, guy goes, hey, you can do this without any capital up front. So that's the big new thing, the new frontier. But we're building on a base of very solid and growing business in the regular paid water systems, but it's all decentralized.
The last big topic, which is the segue from a business that is growing, and I'll show the graph shortly because I'm about to talk about the quarterly numbers, to the pay by the gallon model, which requires a serious ramp up. And as I was pointing out here, get earlier in the chain to people we don't normally talk to who are still wrestling with the problem. Because right now, we don't want to talk to them. They're paying because they don't have the money. So we're like, they're time wasters, but they will not be time wasters once we address them under water on demand.
So when I speak to folks on a daily basis, I talk about modular water systems, last several years growth, right? Started in 2019, you grew by 400% one year and 500% by another period. And I said, truthfully, those numbers are great, but when you're starting from zero, it's easy to look like, like a rocket ship. I said, the number that really counts is that 60% of our contracts are basis of design, meaning the engineers go, no, you need this, right? Or the customer says, no, I need this. Now, that's 60. If those engineers are made aware that in the very first conversation in the process, if these are the guys that are going to waste your time, Mr. Engineer, because they don't have the money anyway, and you're going to spend, all this time and energy. If you tell them up front, by the way, the financing is taken care of, the end-to-end service all done, you could bring that basis of design, or in other words, you need these guys, to almost like to 99%, because you break the time wasting cycle. Because anybody is a legitimate now end user, right? And if you're very shaky, if you're a small business and you really have a lot of financial difficulties, okay, additional security deposits like you would a renter.
Exactly. And, here's the thing is that we are unique technologically right now, but then we will add the uniqueness of being able to finance these things, which not everybody can do. And our special sauce being that we're going to continue to work with retail fundraising, be it crowdfunding, which will restart after the dust is settled. And of course, what we're currently doing with accredited investors, we really know that model. And I'm so proud of how you guys are doing with continuing to refine it. I see it every single day. And of course, the traffic hits and everybody goes crazy and it's like chickens, running around, heads cut off. But that's normal. That's perfectly normal.
You get these signal messages from me at 6:30 a.m. We're doing this, right? Because I'm the target, right? I'm the funnel, right? Guys throw me in their funnel all day long, and I go, okay, that works. That talks to me, right? And and that is how we have found every successful marketing measure that we've currently deployed, right? It was basically putting myself out there as a prospect and finding what really worked. So
right. Because the three of us are your classic, middle-class investor, and we're looking for exactly those things. So you're right. We are a survey says. All right. Now here is a screen about the quarterly results. Now, the reason we didn't do a press release on this is because they were somewhat down. The revenue was down by 26% from Q2. Cost of sales was down also. It was down more. In other words, this is good. In other words, we had less revenue, but we also had much less cost of sales, if you understand what I'm saying. Gross profit increased, and also gross margins went from 10.7% to 16.7%, which is very, very good news. And we also, we continue to invest money in this whole process, the merger itself. We're having to finance it from our investors, but it's actually losses are narrowing. Now, how are we looking for the year? Well, let's look back at the forecast that you guys have seen, and we are, I'm happy to say, on track to make the roughly $7.3 million number that was forecast earlier this year. So, in other words, Q4 really caught things up, and I'm very proud of the team because they went all out to get the process of getting recognized revenue is you get to count your revenue when a milestone has been met, like a shipment or whatever. And so they really started focusing on milestones, and the numbers are looking good. Now we have a big number for next year, 2024, as you can see, and modular water is really being counted upon to double again, right? It doubled, well, actually it quadrupled from 21 to 22, but now, and then it's not a doubling from 22 to 23.
A little better than 50% though. A little better than 50% from.
And now doubling it. Now, as I've been saying, the green bars are way out there in the future. Why? Because it's going to take us time to build the systems and do acquisitions in order to have the software and the engineering teams and so forth for this pay per gallon. So that's why we're going to focus, meanwhile, on growing the conventional businesses, which will support it. So I'm very happy to say that, third quarter was slightly down, although more profitable, as you saw, but we are on track for the end of the year. That's the wonderful news. And I'm very happy with Tom Marchicello, Mark Stevens, Dan Early, and the rest of the teams. So that's that picture. And now we segue right into the FWD.
Well,
The FWD I want to start by, I know we have a lot of our, we call them the OriginClear VIPs, our legacy VIPs, all of you current investors in here. And one of the things I wanted to give you as a nugget is, as we continue to move forward and want to communicate in a better capacity with you, I've commissioned internally, so this is giving you the sneak peek, I've commissioned us to start building a newsletter that we send out consistently to give you more consistent updates outside of just these briefings, to give you more of a heads up on a number of different areas, but also to reach out and make you feel like you have a more constant touch point with us, especially in that space. So, on your surveys, if you guys have feedback for those things, please feel free to hit us up. But we're working to not just improve this whole process, and Riggs mentioned all the technology and the apps and all that kind of stuff. It's also doing a qualitative improvements on our side to make sure that we're reaching out to everybody more proactively and getting in contact with you and keeping in touch with you and keeping you more in the know on what's going on, so you don't have to be hungry for that information so often.
Amen.
To going back to the graph, as I'm in a position to kind of get granular on this, growth by buying versus building is an order of magnitude more rapid, right? So we're going to, in an otherwise slow growing business, starting from relatively small numbers, getting to very impressive numbers very, very quickly is great, but it's still a low margin business. In the outer years, guys, that green column, even if it's small, okay, the gross margins on finance, right? I mean, what is the ROI on money that you're borrowing from, let's say, the Fed, and then you're lending out? What's the ROI? It's infinite, because it's not your money, right? That's why banks are so insane. It's a money on money play. So even if those numbers remain rather modest, okay, the gross margins, the net profits of water on demand, it could have massive revenue, narrow fabrication.
Well, none. The whole water on demand model is delegate fabrication to other divisions or to other companies and delegate the local service. And so, as you can see from this, the operating profit, meaning net profit, is literally almost half. Look at 2027, 1.56 million and a revenue of 4 million. So that gives you an idea. It's around 38% roughly net profits. That's freaking huge.
Well, and that's what I was getting to. The proportionality of the finance and service profits are going to be vastly outsized compared to, our internal divisions are going to look great for the next couple of years. But you're right. You want other people building these things for you. You simply want to be the money. You want to be GMAC finance. You want to be BMW finance, right? And and ultimately that allows for us to become phenomenally more profitable in the outer years. So that's the exciting part.
And in addition, of course, we have the acquisitions, which we showed how by adding just phase one acquisitions, we take that $32 million number in 2026 and we almost 10x it. Now, I'm cautioning everyone that this requires phenomenal execution, but every one of these targets is out there. We are in discussions. Next week, I think I'm going to bring in Bill Charneski, who's handling the actual negotiations. He'll tell us a little bit about what we're doing without naming names and where we're at with talks. And this is super exciting. This is why we are doing a merger, is so that we have, it's not really about that, because we're going to do acquisitions no matter what, merger or not. We're doing acquisitions. That's just how it's going to go down. But it is a vital feature that we don't just build, we buy. And that's what this is about. So with that, I'm going to flip over to the last little bit of this. And yes, well, of course, we have the contact information for Ken, which you always want to do. And there we go. oc.co/Ken or invest@originclear.com, or dial our toll-free number, extension 201, and get in touch with us. Now, we really, really, really want you to fill out your Zoom survey. We read these carefully. So please do fill it out. It's really worth it. Now, Ron Williams' comment, I Google searched OriginClear and Pool Preserver popped up. Yes, it was so sexy at the time, 2020 actually. And because why? Because we saw a tremendous loss of people losing their jobs, and we thought, hey, retrain them for water. The problem is, oh my God, we did one pilot, and doing that one entrepreneur sucked up so much bandwidth. We realized that we can't be a water academy. We're just not. It doesn't work. But the problem is, Pool Preserver concept. The machine is still out there, still doing its job, is a great idea. But we pivoted over to working with the businesses we're already working with, like the trailer parks, the highway rest stops, the car dealerships, housing developments, and so forth. In other words, you got to go with the flow. Creating new markets is great, but not if it's one of 12 different things you do, right? And so we just, I often like to say that the flip side of focus is sacrifice. You cannot focus without sacrifice. And we had to put the whole idea of waterpreneurs, which is actually a trademark we own, we had to put it on the back burner because we can't create waterpreneurs. We can only serve the ones that are out there already. So get us your Zoom surveys, y'all.
And if you fill out those surveys, and if you want to talk to Ken, filling out the survey is the easiest way to do that, because once you complete that survey and you say, yes, I want to talk to Ken, it automatically goes into our system and sets up one of our team to be able to reach out to you to schedule an appointment with Ken. So please use the easy method.
Automation.
The survey.
Yes. He wants you to test out his automation.
I don't need you to test it. You guys tested it out last week and it worked phenomenally.
There you go.
So thank you guys so much for doing that. But no, we genuinely want your feedback, but also trying to make life easy. If you fill out the survey, you can get in touch with Ken. That's literally the quickest way to do it. Is do the survey. We'll get you taken care of.
That's funny because, okay, Ron, just some important questions. Interestingly enough, what brought Ron to us where we are today, he was looking for a new job at the time. So it had a benefit, what we did, but it was definitely for us, we had to just make a decision that we would work with sometimes you work with the bigger amount of business and you have to sacrifice the smaller. Now,
what we're doing now is scalable. And the important part and our responsibility to our investors is to get something highly scalable. And what we're doing delivers the ability to radically expand an already existing gigantic business that the world is finally writing news stories about. It's time to invest in, So, I mean, there's no friction here, which is really kind of something.
This is pent-up demand. Demand.
Well, I'm saying we're not used to no friction. This is like they've kind of greased the skids here and said, please do this. And here we are positioned with this incredible disruption, which I think is just, the timing was very serendipitous.
And that is a happy coincidence. Okay, Marcus Walker says, correct me if I'm wrong, are we merging with more than one company? Okay, let me explain. It's very simple. It's a multiple step merger only because what we did was we created a subsidiary called Water on Demand. And then in order to give Water on Demand revenues, OriginClear sold first modular water systems to Water on Demand in return for 6 million shares, which the shareholders own now. And then did the same thing by making Progressive Water also part of the whole. And in a weird twist, because Progressive Water actually has been around for 25 years, we ended up using that as the actual corporate shell, shall we say, for it all, and renamed it Water on Demand. So what you have is you have Water on Demand, and then MWS joined Water on Demand, PWT joined Water on Demand, PWT became the boss, then it got renamed Water on Demand, and now the whole thing is on a definitive agreement to merge with Fortune Rising. And it's so simple. You guys don't get it? Come on, it's super simple. Come on. But it got done, and we achieved a $32 million valuation in the process, which I am so proud of the team for. So thank you all. And it's been a really, really fun briefing. Next week, we will cover acquisitions. That is a big deal. So thank you all. Thank you, Marcus. And I'll be seeing you guys once more before the holidays. Everyone, it's been great. Thank you, gentlemen. It's been fun. And see you guys next week. I think the new streamlined system where I go over my own rigs posts makes it really simple. I'll just post all week and then I go over my posts, and some of them, not all of them.
You can't, and you just can't, right? Not all of them. You can't forget, and you can't forget what you said.
Bingo. I just look at
yesterday. Right.
Exactly. It's like, oh yeah, I was there. All right, everyone. Have a good weekend.
Great
Take
night,
care.
everybody.